Good evening na habari za jioni. Karibuni sana kwenye webinar yetu. Nashukuru kwa kutenga muda na kuweza kuattend hii webinar. Kwa majina naitwa Ibrahim Kasim Zakaria kutoka CRDB Brokerage Unit. Na leo tutakuwa tunaongelea kuhusu maendeleo ya capital markets. Tutakuwa tunaongelea the monetary policy committee statement. Tutaongelea maendeleo ya capital markets kwa kota ya kwanza kuanzia January mpaka mwezi wa 3 2025, lakini pia tutagusia kidogo kwenye maendeleo ya capital markets kwa hii wiki ya 15 ya huu mwaka. Tunakaribisha sana, it will be very entertaining. Siko mwenyewe, nipo na wenzangu kutoka CRDB Brokerage. Nitakuwa na Ami Mwamunyi ambaye ni Manager of Corporate Finance and Advisory, lakini pia nitakuwa na Mr. Witiko Mbilinyi, yeye ni Manager Trading and Operations. Kwa pamoja tutaweza kuyachambua haya masoko vizuri. Bila kupoteza muda mwingi, ningewaomba dakika walau 3 kusudi tuwape nafasi na wengine waweze kujoin, kisha tutaanza hii event yetu. Kwa hiyo ndani ya dakika 3 tutaweza kuanza. Karibuni sana. Okay, good evening again. Karibuni sana na tuko tayari kuanza our webinar. So, ladies and gentlemen, good evening to everyone and welcome to the week's Capital Markets Update webinar hosted by CRDB Bank. And thank you for joining us. One more time for the entrants who just came in right now. I'm Ibrahim Zakaria and I'll be moderating today's session. With us, our speakers, we have two main speakers. We have Mr. Ami Mwamuni from CRDB. He is the manager of corporate finance and advisory, but also we have Mr. Rutiko Mbilinyi. He's the manager for trading and operations, all in the CRDB brokerage unit. They will be with us today. So today's webinar will cover three main segments. We'll have a review of quarterly capital markets report for Q1 2025, including equity performance, bond market activities, and treasury bond auctions. We'll also have a summary of weekly capital markets report for week 15, covering both equities and fixed income developments. But we'll also have the key highlights from the recent Monetary Policy Committee statement issued by the central bank. We want our webinar to be very interactive, so we encourage all members to make use of the chat section, but as well as the Q&A section. So feel free just to type in your question and we will be able to see it and we'll answer all questions. We'll attempt to answer all the questions. Yeah, so without further ado, let me welcome Mr. Rutiko Mbilinyi, who will kick off our webinar today. Karibu sana.
Thank you, Ibrahim. Yeah, it's quite an interesting week. And the best thing is that we have all the reports here. We have the weekly report, but we also have the quarterly report. And my take is that at least we have a quarterly report today, because on the weekly reports, we are seeing a lot of reds there. The market capitalization has been down by 63%. The number of shares traded within the week is also down by 42%. The total market capitalization is also down by 0.77%. The best thing is that our domestic market capitalization is up by 0.1%, and the all share index is down by 0.77%. Tanzanian share index is still up by 1%, by 0.1%. Industrialized index is up by 0.25%, and there's a slight decrease in the banking, finance, and investment index. My take in this is like the domestic market is doing fairly well, but I can see that we're having some of the rise because of the cross-listed companies, and that is more visible on the gainers, because Afriprice, a local company, has gained 4.3%, and Tanzania Portland Cement has gained 2%. But when you go to the losers, we see most of the losers are Jubilee Holdings, NMG, EBL, and KCB. And I believe that those are the people who are, these companies have also highly affected the total market capitalization. Ami, what's your take on that? Just looking at these counters, you can see that the Tanzanian share index is still up by 0.1%, but the domestic market capitalization is down by 0.77%. I believe that these cross-listed companies are the ones which are putting us down. And is it that our market has not reacted to what is happening in the world, and other markets are doing this, are reacting to what's happening in the world right now?
Yeah, definitely, Rutiko. What we are seeing is that the Tanzanian market is still resilient, and it's a unique market, because if you go back, I think 3 years ago, 2021, during the pandemic, it was late to catch the fever. But also when you look at the currency market as well, when in 2021 other currencies like the Naira were catching fever against the USD, the Kenyan shilling, the Tanzanian shilling remained resilient. So we still, in that same spirit, we still see resiliency. So in Kenya, it was a rough week, of course, for most counters, and that was the case also in the Western African markets as well. The BVRM, it closed on the red this week, but globally it was a bloodshed. Wanasema damu ilimwagika kwa sababu tariffs za Trump zinaumiza. They are affecting the global economies, lakini they are also bringing a lot of uncertainties. So with that being said, we still see a very resilient Tanzanian market, and that is anticipated to continue.
Yeah, tariff za Trump zinaumiza. Lakini in one way or the other, I believe that right now most of the tariffs are down, except for China. And so what's your take? Should we expect that the market will react eventually, or it will still be resilient, taking into consideration that Trump has only placed the high tariffs in China right now, and some of the markets in America have already started picking up?
Okay, there are two or three scenarios. First, who are the participants in the Tanzanian market? Of course, the foreign investors are still at large, major drivers when it comes to volume, though for the past 3 years, the participation has been largely absorbed by the local investors. So with the foreign investors, and tariffs are not an issue. An investor is worried about the direction of the market. They want to know, is the market going up or is the market going down? Because now there is a question, are rates going to go to, will they remain elevated? Or are they going to be, or is the Fed going to cut the rates? Or will the Fed be forced to increase rates? So that uncertainty is the one which is confusing the market, and it's the one which is bringing volatility in the market. So with that being said, as uncertainty continues, that is going to at least affect foreign flows coming into our market. But locally, a typical Tanzanian investor would not be worried about rates in the global markets. What they'll be worried about is the trends within the domestic market. Am I going to get my dividend? Is it going to be as much as I anticipated? So as far as the local companies won't disappoint when it comes to the dividend declaration period, we should not see market panic locally. That is what I anticipate. But foreign flows, for now, I think this is going to be a hiccup because uncertainty is what is driving the market currently.
Thank you, Ami. Yeah, so investors for the Tanzanian companies, we believe that, as Ami just said, as long as the company can attain the dividend that the investors are expecting and can keep on doing great as they have been doing so far, I believe that you shouldn't panic with how the market is going to be. Afri price is on the rise, TPCC is on the rise, MKCB has slightly fallen. I believe the banking sector is punished in one way or the other because of lack of the insider trading window that we are in right now. So most of the bankers are now not buying the stocks. Maybe that will be one of the reasons. Yeah, so general investors during this period, after the quarters end, for the whole month, most of the bankers are, as long as you're a banker of a listed company, you cannot buy or sell shares of your particular company because of the insider trading rules. And I believe that might be one of the reasons why the banking and finance and investment index is a bit down this week. But also, this is a time where most of the audited financials are out, and also that can be one of the reasons of this of the movement that we are seeing in the market, especially for the banking industry. And also, people are now starting to speculate on what has happened on the first quarter because the first quarter is done. So now, right now, people have started to speculate like if this counters, the bank has performed well in the first quarter or has not performed well. But there are also a lot of dividend speculations within the market. So that might be the reason. But eventually, we can just see the market turnover, TBL leading, followed by CRDB as usual, performing very well. TPCC has been strong also in trading within the week, and the price has also appreciated. NMB, then other counters. The best part is, like, I hope you can see the screen, because this is the part where I would really like to emphasize, and for you investors to take a look on the opportunity missed. We can see throughout the quarter, the most performing stock was NMG with 16% since January to date, while followed by CRDB, a 16.4% spike. In absolute terms, if you had invested 10 million back in January, right now you'd avoid again like something like 1.6 million net gross, not factoring in the fees. A person with 1 billion has already pocketed over 100 million. Ami, do you see any other opportunities which can bring this much return to our investors in the market?
Well, when you talk about opportunities, you mean the same asset classes or different asset classes?
Yeah, actually in shares, especially in shares.
I think it's a strong start. It's a strong start, especially for CRDB. I think last year it was the year where we saw strong gains from the NMB and also Nicole. They had very strong first and second quarters. I think it was the time where we saw Nicole even gaining 100%. Yeah. But I see this year CRDB is on the rise, and that is largely explained by the fact that a lot of counters have actually have hit their peak, and we don't see any other upward movement. But are there opportunities? Yes, I would say opportunities are still positive, especially on the CRDB counter itself. With I think the last time I did evaluation on the counter, it was fairly valued. It was valued at around 930 Tanzanian shilling. Still, there is more or less a 25% upside, and we strongly believe that the counter has the potential to hit 1,000, which most of the retail investors are hoping for that. So with current prices, that is an upside of roughly 30%. So with that being said, the opportunity is still there. That is factoring out the dividends, which of course in the banking sector year on year have been increasing. So when you see you have a constant dividend growth, but you also have a very positive capital appreciation, opportunities are there. Of course, as TPCC also, I think last year it was in a reversal, but this year it has been also an interesting look, especially for the first quarter, despite its weak fundamentals, because we saw its top line, the revenue slowing down, but investors are still positive. And I think that attests to the fact that it is a constant dividend paying stock. Tico, one will be surprised that there is counters like MKCB. For an investor, these are counters which we normally overlook. What's your comment on these? We call them small cap stocks or penny stocks.
Thank you for the question, Ami. By the way, I'm seeing some of sophisticated players within the market, and I'm really looking forward to seeing them participate actively in the charts. So if you have any question about what we are presenting right now, you can just drop it into the chats. And if you also have any comments also, we can just drop it into the chat and we can also discuss that. So Ami, just MKCB had a very strong year last year. A slight hiccup on the last quarter, but you could see even the stock started trading after showing a very big turnaround and very good results. So they are counters to watch because there are a lot of counters which are undervalued in our market and they have potential of unlocking the value. So my take is I'm very curious to see how they have performed this first quarter. We had a session with their CFO, and he gave us the reasons for the performance, or for the poor performance, for the slowing down on the last quarter, and they were not recurring reasons. So I'm very keen to see how they're going to perform this quarter for the first quarter. But it's a counter that we should keep on watching on. And it's something that can really unlock potential and value eventually in the long run if the bank keeps on running the way it has been run for the first, second, and third quarter of last year. Yeah. So without further ado, yes, Ami.
So expounding on the question you've just answered, but also you've just questioned me, are there opportunities? Yeah. Another reason is, asset classes compete for investors. What we are seeing in the bond market also explains what is going to happen in the equity market and vice versa. In the bond market, you as a trader, you have seen yields kind of cooling off, yeah? We have seen the central bank cutting down rates, coupons dropping from 15.95 going down to 15.75, but the yields in the market, I think in the last paper, in the 20-year paper, currently is at 15.25. What's the market rate? 14 point what?
So actually, most of the traders right now in the secondary market are selling the paper at 14.7, 14.8.
So at 14.
So yeah, it has slowed down a bit.
So with yields getting dropping in the fixed income securities, we should see those investors who are treasure hunters going back to the equity market and trying to gain, I would say, a risk-free trade, because you get in now, you are not tied with the insider trading regulations. You're just a typical investor who's a business person. You are sure of yielding an 8%, a 7% to 9% in terms of dividend yield within a space of a few months. So yeah, opportunities are still available in the equity market, and I think investors should look at the market now with that type of sophistication, but they should also compare how these asset classes move together, because they explain a lot about the opportunities within the fixed income, but also within the equity market.
Yeah, thanks. That's a good take. That's a good take, Ami. There's a lot of opportunities and still in the equity market space. The only issue is like some of the most, because we have fixed income paying very handsome coupons and with attractive yield, some of investors just like to invest in the fixed income space. But as you said, it's a dividend period. The whole of second quarter, we'll be hearing one company after another announcing dividends. And if you look at the dividend yields of most of the companies, especially in the banking sector, you're talking about 6 to 8% to 10%. So if you can, you're in a position of pocketing 10% in 2 months, I think that's an opportunity to grab. And with the if history, looking at the history of how things have been happening, is like even after the ex-div period, especially because you find that after the ex-div period, you find that most of the companies have already issued the first quarter results and the second quarter results. And if the results are good, you find that it's not happening, the price correction does not happen that much. So that's a very good opportunity for investors to take the dividend yield without highly affecting the value of their investment in one way or the other. So just going forward, Ibra, you can see, I would like the investors also to see the investors' participation over the week. Again, as usual, a lot of activities on the buy side are from the local investors, while we have seen some of the foreign investors exiting the market, and this has been a trend for a while. But again, commendation to Tanzanians. It seems like we are in a position where we trust our market and we are very positive with our market, and the buy side is always dominated by local investors. Ami, what's your take in this? Are these foreigners? I thought like the foreigners, why are they foreign? Do you see any turnaround with the reciprocals and the tariffs in this space?
I think, of course, as I said earlier, when we were beginning our session, first we've been observing this trend for the past 4 years. Yeah, since 2021, it was the foreigners exiting and the domestic market more or less absorbing that shock. And it was until end of last year when the sentiment was starting to change, where we started, I think it was around September, where actually foreigners were the net buyers, not net sellers. And then we started seeing hopes. We also started seeing investors, foreign investors coming into the market, doing the normal investor meetings to see which counters to invest in. And all was smooth. The sea was calm until January, when our guy, the US president, started dishing out these tariffs. Then that's when we have started to see things becoming a little bit shaky, because for those guys, first, they would want to park their money in safe haven. And when you talk about safe haven, for now, it's not even the US treasuries. You have the currencies like the Japanese yen, which have been doing great for the past 1 month. You have the the Swiss franc, which is also considered a safe haven. It has been very strong against the USD this month. So investors should be parking their money there. And frontier markets, more or less, is the last thing a foreign investor looks when periods, global or geopolitical arena is still uncertain. That's where they least look at. So with that being said, local investors are going to dominate this market moving forward, at least for the next quarter or two, until things calm down. But later on, we should see the foreigners coming in, because the markets have been doing great. Last year, we saw the Nairobi Stock Exchange itself, its index, up by more or less more than 20%. So that is an attraction for these bargain hunters in global markets.
Thank you, Ami. So I'll just address some few questions within the chats. Frank, I would like to know more about Mkombozi Commercial Bank market and AfriPrice. Kingsman, my observation as well, CRDB is likely to do more trending up to 1,000 as projected, looking at the chart showing the market in CRDB shares. Then John, hello, please. You said about the current NAV of CRDB. I heard it not. May you please mention it again? So, okay. So for John and Kingsman, what is happening right now is like CRDB is trading at 780, 790. Ami just stipulated that he's still optimistic with CRDB, and it has a chance of hitting 1,000 sometime in the future. His last valuation was at 930, but he's very positive with that. The share price will keep on going up eventually if the bank keeps on doing the way it has done. It has been doing. The banking sector, we've seen the likes of CRDB and NMB recording strong growth over the years, and and we believe that there's a very big room of maintaining that growth at least for the next 4 to 5 years, and that's why we are very optimistic that this share price might reach 1,000 eventually in the near future. But in the meantime, they're trading at 780, 790. If history, CRDB had an earning per share of 211 last year. With the payout ratio, we are looking at a very good dividend yield for those who are buying the shares right now, an attractive yield for the next 2 months. And we are still keen on seeing how it will perform in the first quarter performance. So that being said, I think that's all about CRDB, John and Kingsman. Frank, Mkombozi Commercial Bank had I've seen some Mkombozi Commercial Bank enthusiasts in the chat in the audience. I think they'll have one or two things to say. But yeah, Mkombozi came into the market at 1,000. It's currently it went down to 500, and it has currently been trading at 580. Today, this week, it has gone down to 540. As I said, it had very good 3 quarters last year, then some slowdown on the last quarter. And we are still looking at how it will perform this quarter, because according to them, the slowdown the reasons for the slowdown of last quarter were not recurring reasons. So we are very optimistic that if they have, it might have a very good quarter this year, and it's one of the stock which is a bit undervalued. So let's see if it will be in a position to correct itself. Again, I can see a question with AfriPrice. So AfriPrice, it's a company that has really turned around. It was once TCCIA, and it later changed to AfriPrice. It did a right issue, and now we have seen a lot of activities happening there. And actually, these are the counters that we should really be keen on, the AfriPrice and the Nico, because they hold a chunk of shares which are performing really well, and eventually they're actually way undervalued looking at the level of the investments that these companies have. And with these shares that are performing very well in the market and the way they are growing, then eventually they might unlock some value. Or what's your take on that, Ami?
Yeah, I agree with you. And back to Mkombozi, I think, as you just said, it's the company which looks promising. It's the bank which looks promising, and just last year, it graduated from the EGM to the main market. And, fundamentals can be correct, but for the price action to take place and that value to be unlocked, you need a trigger event. You need something which will spark that market correction. And I think for Mkombozi, definitely it just needs that that spark. And for me, if you tell me what spark does Mkombozi need, I'll tell you they just need to pay a dividend, and then we should see value being unlocked in that counter. That's my take on your question.
Okay, so we have to go to the fixed income space, but I'll address few questions very quick before I hand this over to Ibra. So Sadiq, sorry, I'm a newbie having few CRDB shares. If I buy more shares today, do I still have a chance of getting dividend? Yes, Sadiq, we are still, if you buy the shares today, you'll still be eligible for dividend until the bank declares dividend and declares the cum div and the ex div period. So if you buy the shares today, you will get dividend. Frank has just written, I know CRDB, I see the rate changing from 780 to 790 for the interval of 10 and still on this rate for more than 1 week. What are the challenges faced and what are the strategies to ensure we reach that 1,000? So Frank, yeah, CRDB, it has been trading at 780, 790. That might go up or it might go down. It's normal for the market because the market is, what determines the market in the price are the forces of demand and supply. The more the bank performs well, the more the expectations, the more people want to buy in, then the more the shares go up. But also in the other space, like if the performance is not well, then people will be selling, so the prices will go down. If you're looking at the strategies in place, we have no strategies of reaching, and I hope you don't take me out of context. The bank itself has full strategy of performing very well and deliver its full value to shareholders. The bank in place has a lot of strategies in place of making sure that it delivers the full value to shareholders, but it has no. It's highly unlikely for it to have a targeted price of like we want to reach 1,000, and we're not here to say that like we have a targeted price of 1,000 or something like that. But these are the evaluations and the fundamentals that will take us there once we have attained the performance that we are struggling eagerly to attain. So again, back to Mary. Mary, how do we handle market panic in case of drop in prices and uncertainty in the market? So Mary, I would address that very easily. You are the investor. You are the one who is in panic. So what is happening is that you have to do your analysis and see like whatever is happening right now in the market, is this something which is sustainable? Do you see a possibility of a turnaround? And what's your risk appetite? There are people who with very high risk appetite and they buy aggressively while stocks are down and they're overly optimistic. But there are other people who are very risk averse and they just don't want to lose their capital. So if you're a very risk averse investor, then you better park your money in a place where there are a lot of volatile fluctuations. But if you're in a position to bear the risk and take the risk, then once the market once there's a panic in the market, you just need to do the analysis and see whatever is causing the panic in the market, is this sustainable? And if it's sustainable, then you better exit. But if it's something that will last for a short while, then you better just take the advantage of getting in while the prices are low from the panic. Yeah.
I think one of the very funny stories we were discussing in office this week was, you see the S&P 500 dropping, and then what did Trump do? He just tweeted,
"It's time to buy."
It's time to buy. Yeah. So when the market is panicking and when everyone is running out, I think you should be brave enough to run in. Yeah.
You should first analyze
what's inside the room first.
Yeah, you just don't run in. People maybe are running from a lion and you get into the room and you'll be the one eaten. So first you need to do the analysis of why people are running, and you see like if it's the time maybe to take the opportunity, because some people you are seeing what others are not seeing. Thanks a lot. I can see some more questions coming in and we will address them, but in the meantime, can we just go to the fixed income space?
Yes, thank you, Mr. Ami and Mr. Ruchiko, for a very comprehensive overview on the equity market. From what we have heard, it's very exciting times, and we've managed to capture a lot. Now, moving on to the fixed income space, I would just like to touch on a little bit on the Treasury bond auction results for the first quarter. So I'm speaking of January to March of 2025. So what happened is that, as we all know, or we might be aware that the central bank had introduced earlier in the year floating market rates or floating coupon rates for the new issuances of bonds during this year. So essentially what that means is that the BOT would not really have the fixed coupons that were known previously, but they will normally announce the coupon a week before the auction date, or mostly on a Thursday or a Friday before the auction date. Now, as you can see in the table, there were around 6 newly issued bonds during the first quarter. We have seen various terms, 5 years, 10 years, 2 years, 20, 15, 25 years. But the key thing here that I also want to bring in my colleagues is that we're just comparing the coupon rates from what was seen previously to the current ones. Looking at the long-term bonds, so we're looking at 25 and 20 years. We see a slight decline in the coupon rates, right? From, for example, in the 25-year paper, there's a 0.2% decline. In the 20-year paper, there is also a 0.2% decline. However, in the short-term papers, so we're speaking about the 2 years, the 5 years, and even the 10 years, we can see that there is a higher change. For example, in the 2-year paper, the coupon had increased by close to 5%. Yeah, followed by the 5-year paper, the coupon had increased by almost 4%. Yeah, from 9.18% to 13%. What is your take, Ami, on why a very substantial change is seen in the short-term papers in comparison to the long-term papers?
I think it all boils down to, I think when you talk about these rates, more or less you have to talk about the monetary stance of the central bank itself. And the conditions in the central bank rate which you've been observing in the market. Obviously, the rate, the central bank rate hovers around 6%, and it has been held at that particular range for a couple of quarters now. But what we have been seeing in the market, where banks can borrow to each other, that rate has been up on the high side on 8%. So the central bank, being a reasonable entity that controls rates, because the main point of a central bank is to do 2 things: control inflation and unemployment. And more or less here in Tanzania, it's all about stabilizing inflation. It had to raise rates on the shorter end of the yield curve. Why? To control that particular inflation, but also to go accordingly to what is going on in the market itself. Rates were going up, but on the longer end, it's also about maintaining its debt profile, because you don't want to have all these bonds maturing at the same particular period of time at quite an expensive rate, or debt maintenance, but also more or less it also goes down to investor appetite. There's been huge demand in longer end papers compared to shorter end papers, and to attract investors across the yield curve, then the central bank was forced to make these shorter end papers attractive for investors to come in, to make them see, okay, you know what, I can still earn this particular return with a shorter duration. Maybe this is attractive enough. So that is what the central bank has been looking at.
And they have succeeded, because you can see the subscriptions are going up. The 5-year paper subscription oversubscribed. That was not usual. Yeah, the 2-year paper 87% subscription. Actually, I believe what the Bank of Tanzania right now is doing is actually succeeding. There have been a lot of traction right now, and it's not easy to offer a lower rate and expect a good turnout in the market. The market is now informed. A lot of people are looking for CIS. Now, if you can offer them good return, then yeah, they come, and that's visible. And I also feel like the bank, with their take is that they're also creating a benchmark curve. They are really trying to make these as benchmark bond and eventually have a benchmark curve. And I can see them succeeding because even the activities in the secondary market for this paper have been enormous, and we are getting there.
Indeed. Thank you very much, my colleagues, for the very good insight on the newly issued government papers. Now, I'm very happy to tell you, dear listeners, that we have been joined by Mr. Imani Muhingo. He's a senior manager for securities brokerage services at CRDB, and he'll be joining us. So do not usishangae ukisikia sauti yake hapa. He's very much one of us. So moving forward to the next section, we'll just like to highlight very briefly on the secondary market activities during the week 15. So we're looking at the corporate bonds and also government bonds, how they performed during the week. So let me just bring in my colleague Ami. He can just comment a little bit. What we have on the graph, we're seeing that for example, so apologies, that's supposed to read corporate market turnover. So the graph on your top left, it basically shows the listed corporate bonds that were being traded in the secondary market. We've seen that the turnover has been dominated by Azania at 41%, followed by the CRDB Kijani bond, followed by the NMB Jasiri bond, and finally the Samia bond at 2.6%. But more interestingly, on the government paper, we've seen the 20-year papers, really popular during the week in terms of turnover. Sorry, apologies. We've seen the 10-year paper very popular this week in terms of the turnover, with around 58%, followed by the 20 years turnover. What's your take, Lutiko? Why has the 10 years paper being more popular this time, and potentially not the longer term papers, the 25 years during this week?
We just stipulated that the effort that the government has made have highly contributed to these papers with shorter end to be active in the market. But also I think the only problem is, like, with what is happening in the market right now, we are looking at the tenure of the paper, but not the time to maturity. You can find that some of the 10-year paper that have been trading right now have been issued back in 2016. They are 1 year to maturity, and that's in real sense, that's just like a T-bill. In one way or the other, we have seen some papers passing yesterday. We have seen the other papers passing this day, and that's what those are the papers that have been really active in the market currently. These are long-term papers which are almost near to maturity, and so the ones who are holding them bought them at a heavy discount. So while they are realizing that them right now, they are making a good return out of them. But also some of the corporate are issuing this paper out because their coupons have tax implication, and they're investing the money in the new bonds which do not have tax implication. Those are the activities that we have been observing in the market. And actually, the market is quite impressive. You can see there's a total turnover of over 144 billion over a week, which is very okay. We have seen the last auction, the last 20-year auction, 760 billion coming into the market. It shows that there's liquidity. It shows that we have activity, and this keeps on making our market attractive. And that's why I really urge you investors to keep on having faith in our market, to keep on transacting, because we have a lot of activities within the market, and there's easy entry, easy exit. Thanks a lot, Ibra.
Thank you very much, Lutiko, for that. Now, I'll just take a few questions that have been posted in the Q&A section. Kelvin over here has just asked, can I go to CRDB Bank in branch to buy shares? 100%, 100% Kelvin. When you want to buy CRDB shares, please visit any nearby branch and you will be gladly assisted to purchase shares. Also, Kelvin has indicated or has mentioned, is there any WhatsApp group for CRDB share for more information? This is upcoming very soon, Kelvin, and once it's up and running, we will be ready to share with you the details and you will join. So that is coming very soon. Also, there was a question from John Ann. John mentioned, hello, please, you said about the current NAV of CRDB. However, I believe instead of NAV, it could be the share price that you are intending to know about. If I'm not mistaken, this has closed at around 790. So there you go.
Yeah, but I think that was that I already addressed that question. Yeah, just to expedite the question, the Q&A session, I'll just address some of the questions that I can see in the in the chat here. Baraka Moremu, what major business or industry that tend to disrupt the capital market on weekly or monthly basis? Baraka, our best industry is the banking industry. The banking industry is very active, and especially CRDB, the most liquid counter in the market. So yeah, there are a lot of activities there, quarterly financial reports, dividend on time, and those are stocks which usually trade a lot. John, where do you always share this weekly overview document like this we're discussing now? If they are shared in public, please help me. So John, just drop your email. Ibra will add you to our emailing list. We email this to our clients and dear investors like you always. So just drop your email. We'll share this with you. Okay, so Kingsman, for understanding that bank does it business through other people, OPM, and looking at the growing numbers of various investment opportunities in the market nowadays, which lead to people withdraw their money from the banks for sustainability, going concern and progressive performance of the bank, is it currently having other strategic plans to ensure that there are a lot of strategic plans in place, Kingsman, to ensure sustainability? You can see, you've just seen the market right now wants return, and you've just seen CRDB coming to the market last year with Samia bond, 300 billion in 1 month, alternative financing. All those are strategies and plans to mobilize funds and create sustainability. You have seen very competitive returns the bank has been offering, and we are coming up with other products that will obviously boost the liquidity in the market. But Imani, you can just address this even further.
Thank you, Litiko. And just to that's Kingsman, just to remove your worry, I would say to lower your worry. In any economy, money cannot be moved out of the banking sector. So regardless of these opportunities and regardless of how they arise, and we see a lot of them, if you look at the ecosystem, money will go into treasury bonds, and the government will take those funds and deposit them at the central bank, but eventually they will go back into the economy because the government has to spend that money along with the tax that is collected. So it has to get back into the economy, and as long as it gets back into the economy, it's either cash or it's deposited in the banking system. A lot of activities are seen right now, people are investing in equities, in shares. You know, all brokers have trust accounts in the banking sector, in commercial banks. So if you purchase an equity, you have to deposit, it's a pre-funded market, you have to deposit funds into the broker's trust account. So you're depositing funds into a banking system. And if it's paid to another bank account, so the funds are still remaining in the banking system. So market activities growing is actually good for the bank. So more funds are coming into the formal sector, which means more funds are coming into the banking system. It's not a losing sum game. No, it's complementary, I would say. It's complementary. So it's fine. If these opportunities just add on the banking having on the bank having more deposits. If we look at the overall banking sector, that is.
And just adding on that, I think the last study was done by the FSDT. Yeah? It showed that here in Tanzania, despite a population of 61 million, only 22% is still banked. That shows still the untapped market within the domestic market. All the banks need to do is just bring in creative products, which will bring in more clients, will bring in more deposits, and also as a result, drive more growth.
And just to add more on that 22% is banked, but then the adult population that has access to formal financial services goes up to 77%, and that is MNOs. So we know all of the funds that are deposited in MNOs end up in the banking sector as well. So if that's what I mean to say is everything that would come in the economic system, every opportunity that comes in, eventually the funds will end up in the banking sector, just to alleviate the worry that, these things would come, this type of, investments and these alternative channels would come and deplete deposits from the banking sector. I think they just complement.
Thank you, guys. We are running out of time. Imani, be prepared. I have some quick questions with very, very simple answers. So in the benefit of time. So right here, Frank is asking about Tanga and Twiga Cement current market. How about Tanga and Twiga Cement in the current market? Jacob Kitonga wants a bit information on TOL gas. And Elian is asking that the bank have any approach on cryptocurrency, especially mostly BTC. Then Jacob Kitonga again. Bank of Tanzania has introduced new regulation requiring all domestic transactions to be conducted in Tanzanian shillings rather than foreign currency. This move aims to strengthen the local currency, reduce dollarization, and enhance monetary policy effectiveness. But how will this affect the share market and bonds? Yeah, those quick ones, very quick ones, because Ami right here wants to give us a highlight on the monetary policy.
Okay, thank you. I'll start with Tanga and Twiga Cement. I don't know. Well, I would just say generally what we have right now is Tanga Cement. We have seen that they have an AGM, and one of the agendas is dividend declaration. So I'm excited to see what's going to happen there. And what we know about Tanga is we're waiting for Scansem to publish an offer tentatively at the same price that they acquired out Afrisam. So we're just waiting for that offer. They say they want to acquire 100% of the camp of Tanga Cement at the same price that they acquired from Afrisam. So that is the most, for Tanga Cement, people are not looking at fundamentals anymore, not very highly looking at fundamentals anymore. We're just waiting for that offer. And for Twiga Cement, the performance wasn't so handsome last year. But it's because of things that were expected. Capacity has reached its maximum. So we're waiting to see how Scansem will treat the two companies, if there's going to be a merger, or they just operate the two as separate entities. We are yet to see that. I'm very keen on the Twiga Cement AGM this year because there's a lot of things to understand, especially on the Tanga Cement aspect, how these two are going to operate. If it's going to be a merger, then there is going to be possibly there's going to be an impact to Twiga Cement retail shareholders. As for toll gases, it's a company that has a significant opportunity, particularly in the region. There's not many companies that offer what toll gases offer. There's a significant opportunity in the carbon dioxide area. A lot of factories now are growing up like mushrooms, and most of these, require carbon dioxide as one of important inputs. So for instance, all of these beverages, the cokes, that space between the liquid and the top, which covers that is carbon dioxide. So there's a huge market, significant opportunity for toll gases. We know they had some cash flow issues. We wait to see how they're going to tackle that. They have had funding. They wanted to double carbon dioxide production. They're very keen on still investing on carbon dioxide. So going forward, I believe if they get their cash flows in order and they get proper financing to finance the expansion that they want to expand in carbon dioxide, and they tackle the whole region, because there's significant demand from areas like Zimbabwe and the region. I think toll gases it's a good opportunity, but then you have to be careful of how you get into the company. And another question was about cryptocurrency. Is it CRDB specifically has a plan about cryptocurrency? That we have to get back to you. That involves the whole bank. Like we are just the capital markets unit. We are stockbroker. So CRDB, for us, CRDB is also a listed company. So we'll take the question to them and ask them if there's any plan. But I would not direct the question to CRDB, but rather I would direct the question to the central bank. And we know the central bank has been working on this, on digital currencies. So I think until the regulations are clear on cryptocurrencies and digital currencies, that's when you can start asking market players if they can get into that space or not. So for now, I think the question is a bit premature directing it to CRDB. I think we should be directing the question to the regulators. What was the next question?
I think adding on that, it's more or less, without even focusing on the Tanzanian market, globally, a lot of questions have not been answered with cryptocurrency. Is it a medium of exchange, or is it an asset class? So until global players such as the Fed, such as the Bank of England, such as the European Central Bank, such as the top economists around the world agree that is this a medium of exchange or is this an asset class, then that is when I think the trend will be clear on what to do with cryptocurrencies. But as far as I'm concerned, recently, cryptocurrency is just called the new gold. That means people see it as an asset class. People see it as an alternative. They call it the digital gold. People see it as an alternative to gold. So a lot of things are still gray. Let's be patient on that, and things will be clearer in a few years to come.
Thank you very much, Imani, for the good insight on the few questions that have been asked by our audience and investors, and also Ami for adding a bit more to that. One thing I would like to inform our investors, especially Kelvin, who previously asked if he can go to CRDB Bank to buy shares. So just to inform you all, CRDB is currently has a brokerage unit. So previously CRDB was collaborating with a brokerage firm when it comes to buying and selling or trading shares. However, of course, it will soon be announced very formally, but right now, CRDB will, under the brokerage unit, will perform the functions of brokerage. So the buying and selling of shares will be done directly through to CRDB. So this, through by CRDB. So this is something that we'd like all of you to know. And once you visit the branch, that will be the way forward very, very soon. Now, without further ado, may I please request Ami to talk a little bit on the Monetary Policy Committee statement and take us through the most important highlights. Ami, you're very welcome.
Asante sana, Ibra. Thanks a lot. So quickly, I will go through the monetary policy statement, which basically says the direction of the central bank in the coming quarter. What will be its stance? Where will the rates be at? So moving on quickly. I will start with the monetary policy stance itself. So what has the central bank agreed to do in the next quarter? First, it has maintained its central bank rate at 6%, but also the 7-day interbank rate, which more or less mirrors or shadows the central bank rate, or it's supposed to be the one channeling that monetary policy towards the real economy, is targeted to be between 4 to 8%. As of the last quarter, it has been on the higher end, hitting the higher end of the band, which is 8%. What about economic growth? Mainland, that means Tanzania, previously Tanganyika, is expected to grow by 5.5%, 6.1% in the second quarter of 2025. But also Zanzibar is also expected to grow 6.5% also in the second quarter of 2025. Why one would ask why Zanzibar is expected to grow faster than Tanzania? Of course, it's the population, the type of economic structure, the underlying economic structures within the two blocks in Tanzania, and so on. Inflation, of course, is expected to remain at around 3.2, and this is what we've been observing for the past 12 months. Also, how about in Zanzibar? More or less it's going to be the same. But when you talk about the monetary policy stance, you also have to talk about the banking sector stability in itself. So what has been the situation with the banking sector? Of course, it has been stable, it remains to be profitable, and is also adequately capitalized. Non-performing loans are more or less below the recommended 5.5% cap by the central bank. How about the liquidity conditions? Of course, we are observing improved liquidity due to fiscal operations, but also small banks are facing higher interbank costs. Money supply and credit, of course, we anticipate from the monetary policy statement, we anticipate a strong money supply growth, which is, according to the central bank, above 12%. And private sector credit, in Q1, it grew by 12.7, largely driven by SMEs, agriculture, trade, and manufacturing, but we should see double-digit growth persisting moving forward. What about the fiscal performance of the economy in Q1 and moving forward? So far as the tax man is concerned, tax revenues are on target, and that is largely due to enhanced compliance. And public debt is still sustainable. I think Emmanuel attested in the few weeks, I think last week or 2 weeks ago, when the CAG was saying deni letu la taifa ni trilioni ngapi, a lot of people were looking at that particular number. But when you look at that debt, don't take that number at absolute terms. You have to look at debt in relationship to the GDP. We are yet to hit the cap, which is roughly 55%. We are yet to hit that cap. So things are still good. We still have space. We still have room to borrow. What about foreign reserves? They remain to be adequate. Yeah, around 5.6 billion USD, which can cover 4.5 months. So I think the question would be, kwa sisi wasikilizaji, as an investor, what should I do? If I'm in equities, what should I do? What actions should I take? I think when it comes to an investor, an equity investor, one should say it should expand their positions or maintain their holdings, especially the ones who are investing in financial stocks, because this, according to the central bank, it has been one of the fastest growing sectors around. But also they should stay vigilant to global economics signals for risk management, because we see uncertainty in global markets, just as we've seen, we've discussed earlier. For those who are in the fixed income space, the bond investors, I think long-term bonds are still attractive. Why? Because of the yields are still attractive and they're stable, but also inflation is quite low. I've just reported that inflation is expected to be around 3.2%, and you have yields hovering around 14.7 to 15.2. It's still attractive, but they should closely observe liquidity and interest dynamics to fine-tune positioning. So you are a bond investor, at least look at interest dynamics. And we don't say you should observe by yourself. Call us, CRDB, as a brokerage unit, tell us, ask us what's happening, and we'll give you bespoke and investing advice, and you'll be able to fine-tune your portfolio accordingly. Yeah, so that is what the MPC was saying this quarter. Imani, 6% once again. What's up? That's all I can ask you. What's up?
Yeah, I think since the central bank maintained the CBR at the same rate, similar to previous previous months or previous quarters. I think they see the economy as stable. Growth in the banking sector. We have seen results from the banking sector from December, the last quarter. They're impressive. Money supply is within target. Inflation is within target. So they don't want to disturb anything in this with the current stability. So everything is stable. I think that's why they maintain the CBR similar at 6%. We see some tightening liquidity, especially in the interbank money market, as you know, the anchor rate, the 7 days interbank cash market rate hovers a bit above 8%, and we know the upper corridor is between 6% and 8%. So we see a bit of tightening there, but then it's within the deviation is not significant. It's still within target. We know the central bank will intervene if the deviation goes significantly above 8%. We know the central bank has intervened before in August last year, I think up to around December or January through reverse repos. So I think if that deviation is significant, the central bank will intervene. So this just shows stability and confidence from the central bank that the economy is performing, or it's stable. Inflation is stable, money supply is stable, everything. They want everything to remain the same.
Yeah, Imani, enough of, thank you for the good insights and enough of these complex things. There's such a simple question, and I know that you're coming from a very important meeting. Nema wants to know all about Vodacom. What's happening there?
So yeah, Vodacom, I think I would want to know in what perspective you want to understand Vodacom shares, because they're still the same in the market. You know that liquidity hasn't improved in the market. There's still significant offers at 770 and very few bids. But Vodacom as a company has been doing well. I haven't gone through the most recent results, but I know they're profitable, and I know they have a lot of plans, a lot of investments. They see significant growth. I think revenue is growing in double digits. The market is competitive. There's significant concentration in the telco sector, so the market share is still within 31-32%. But the market overall, the telco sector overall, the population structure of Tanzania, I think the median age is about 18 years, between 18 to 20. So there's a lot of people each year coming into the market. So graduates or people going into college, they all buy phones. They all need new chips, and they are all data consumers. And as they get into the market, they get employed, they start trading, they start transacting funds, which is through M-Pesa and the likes. So they see significant growth, but how long will it, reflect the market prices? That is something else. That is what we are here to see. I can't. I believe the liquidity might continue for a while until the market performance catches up with the current prices. I can't say that is next year or in the next 2 years. I think that still needs time. But Vodacom as a company is doing fine. It's very healthy. The balance sheet is healthy, and the performance is growing. Profitability is growing, and I believe they will issue a dividend, as they issued a dividend last year. It won't be as attractive as maybe other dividends, but I believe they'll issue a dividend as well because they're profitable and they have a clear dividend policy of 50%.
Thank you, Imani. So actually we have another question from John, a bit irrelevant to the topic. Why do you conduct AGM in Dar instead of Arusha? Ami, you've been on all these AGMs. What is happening? Why Arusha, not Dar?
I think it falls down to us investors ourselves, because from my experience, the location of the AGM is when it comes as an agenda in the meeting, and investors actually conduct a vote of where they want to be or where they would want the next AGM to take place. For instance, last year it was recommended that it should go to Zanzibar, but then it was already recommended that it should be in Arusha. So with that being said, I think Mr. John, first I'll be happy to see you in Arusha, so that whenever that agenda comes up, we could see substantial votes for Dar es Salaam maybe. But so far, Arusha has been a mainstay, and we expect that.
But they do have access to webinar, to online, right?
Exactly.
So
One
they
could
can
attend online.
They can attend and they can ask questions.
Yeah.
Yeah, but John, don't take us out of context. You better come to Arusha. Welcome to Arusha, and you have a chance to voice out your concerns. But also, as Imani specifically said, we are the brokerage unit. We are not the spokespeople of the bank. So yeah, you can you can channel the question also to investors relation, and you can channel the concerns there. Then I believe your voice will be heard.
Thank you very much, Lutiko. So I think this brings us to the end of our webinar today. We've managed to cover plenty of what has happened in the first quarter. We've covered what has happened in this week, or week 15 of 2025. We've also covered the Monetary Policy Committee statement. We're very happy with the interactions that we have got. We've had quite a number of questions coming from the audience, the investors. While we will definitely take upon any last questions that are coming up, we still encourage you to just indicate your emails when you want, or if you want to receive regular market reports, regular financial highlights, regular valuation reports, etc. that CRDB issues. These are not paid for, at least at the moment. So just drop in your emails and we'll be very happy to interact with you. Mr. Lutiko wants to take a question from Kingsman.
Yeah, so actually, I think before I respond to Kingsman's question, Epaphras, you dropped the question, and I wanted more clarity. I'll just give you a chance. You can raise your hand, and we can accept you, and we can hear your question. And if there's anyone, at least 2 questions, if someone wants to be heard, we'll add maximum 2 that we'll invite. I've seen some people who are usually very keen in asking questions here, so you're welcome. Or any comment, but Kingsman wants to know when CRDB will issue a dividend this time. So as Imani specifically said, you are not the spokespeople of the bank, so we cannot say the specific time. But if history is to be taken into consideration here, in most cases the AGMs are usually around May, right?
Yeah.
So yeah, I believe by the end of this month you will be in a position to know when exactly the AGM will be, but it will be somewhere around May. I believe the investors relation will be in touch and they'll share this information. Epaphras, I wanted some clarity because I in the Q&A you just asked what's the for the current trend of Samia bond, do you see promising growth? Karibu uulize swali lako kwa sababu sikulielewa trend gani ulikuwa unataka kuijua zaidi. If Epaphras is not here, then, and there is no question, I think we are done. I'm done with my end, Ibra.
Thank you very much, Mr. Lutiko. So finally, Neema has asked here, very useful session. Thank you very much, Neema, for your encouraging comments. Will this be held every week? The answer is yes. We do hold these webinars every Friday from 6 p.m. We like to use 1 hour. I know we've exceeded by at least 15 minutes today, but again, this is the end of the session at least. So you are very welcome. We'll be sending out the links to the online webinar much earlier in advance. Also follow our social media pages on Instagram, on LinkedIn. We have a WhatsApp channel, CRDB Bank PLC. You will just search it in the WhatsApp channels page, and you will see these regular updates and obtain the links that will direct you towards our weekly webinars. Having said that, we thank you very much for your attendance today. We invite you in the future webinars. We invite you to send us emails at brokerage_services@crdbbank.co.tz for any queries that you have regarding capital markets, investment advisory, wealth management, or any question that you would like more clarification on, you're more than welcome. You're welcome to visit our branches, the head office, or whichever branch is close to you. We'll be more than happy to assist. Otherwise, let me wish you all a lovely evening and a very good weekend. Karibuni sana, tuonane wiki inayofuata. Karibuni sana, and thank you very much.